What if I told you there's a powerful tax strategy that could save you thousands of dollars each year? Today we're diving deep into the exciting world of tax loss harvesting, focusing specifically on Vanguard, Fidelity, Robinhood, and Wealthfront. Did you know tax loss harvesting allows you to offset your investment losses against your gains? This technique can significantly lower your tax bill, keeping more money in your pocket. Let's start with understanding exactly what tax loss harvesting means. Simply put, it involves selling investments that are currently at a loss to offset gains you've made elsewhere. But how does it actually work in practice? Imagine you made $5,000 in gains this year, but also hold investments showing $2,000 loss. Tax loss harvesting lets you use that $2,000 loss to reduce your taxable gains to just $3,000. Pretty amazing, right? However, you need to be aware of the wash sale rule, which prevents you from buying back the exact same assets within 30 days. Now let's see how this works on Vanguard's platform. Vanguard doesn't offer automated tax loss harvesting, but you can perform it manually with ease. Simply identify losing investments and replace them with similar but not identical assets. Fidelity, on the other hand, provides more robust tools for tax loss harvesting. Fidelity's platform makes it easier to track your losses and potential tax benefits. But what if you're using Robinhood? Robinhood is great for beginners, but you will need to manually track and execute your tax loss harvesting strategy. It's simple, but requires more attention to detail compared to automated platforms. Speaking of automation, let's explore Wealthfront, known for its industry-leading automated tax loss harvesting. Wealthfront automatically identifies losses and strategically executes harvesting transactions for you. Did you know Wealthfront claims automated tax loss harvesting can add up to 1.8% annually to your returns? Now that's impressive. But is automation always better? Not necessarily. It depends on your personal investing style and how hands-on you want to be. Comparing these four platforms side by side, each has its unique strengths and weaknesses. Vanguard is ideal if you prefer a DIY, low-cost approach. Fidelity combines flexibility and ease of use with excellent tax tracking tools. Robinhood is straightforward, perfect for newer investors who don't mind a manual process. Wealthfront's automated system is unbeatable if convenience and ease are your top priorities. But watch out. Common mistakes like ignoring the wash sale rule could negate your tax benefits. Timing your harvest correctly is critical. Doing it too late or too early could cost you. Have you ever wondered if tax loss harvesting is only for wealthy investors? The answer is no. Anyone with taxable investments can benefit from this strategy. Regularly reviewing your portfolio for harvesting opportunities could significantly boost your after-tax returns. Curious about real-life results? Many investors have saved thousands by strategically applying tax loss harvesting on their chosen platforms. Remember, small efforts in tax planning can lead to substantial savings over time. Are you already utilizing tax loss harvesting? Share your experience in the comments below and help others learn from your success. Let's quickly recap. Tax loss harvesting involves strategically selling losing assets to reduce taxes. Vanguard offers great manual flexibility, while Fidelity provides robust tracking and executional tools. Robinhood is simple and beginner-friendly but requires more manual oversight. Wealthfront leads the pack with seamless automation, making it ideal for a hands-off approach. Choosing the right platform depends heavily on your investment goals, experience, and personal preference. Don't underestimate the power of tax loss harvesting. It's your ally in maximizing investment returns. Start analyzing your portfolio today and discover how much you can save. Did this video help clarify tax loss harvesting for you? Smash that like button and share this valuable strategy with others. Subscribe now for more insightful investment tips to secure your financial future.